Hello dear traders, and welcome back to Insta TV for another financial news release with me, Anna Kasatkina. The new trading week kicked off on a quiet note. The main event in the traders' calendar is the minutes of the latest policy meeting of the Federal Reserve. The minutes are due on Wednesday. The content of the document is predictable, as investors expect to find out fresh evidence of dovish Fed's rhetoric on monetary policy. So the cautious Federal Reserve could nudge the US dollar lower. Today, the US markets are closed for President Day holiday. Nevertheless, despite a smaller trade volume in the thin market, the US dollar index remains at the level close to a two-year high. Last Friday, the University of Michigan released a welcome news on growing optimism among US consumers in February. According to flash estimates, consumer sentiment index climbed to 95.5, much better than expected. Meanwhile, news on progress in the trade talks between the US and China is mainly responsible for market sentiment on Forex. The dollar-yen pair, which mirrors risk sentiment, is trading sideways in the range of 110.40 to 110.60. Obviously, market participants have not decided yet on a trading strategy amid lingering uncertainty in the trade relations between the two largest global economies. Despite the bank holiday in the US, the talks are set to continue today in Washington. Investors believe that the US and China are on path to a trade deal, and Donald Trump is ready to extend the deadline set for March the 1st and hold off a planned tariff hike on Chinese imports. The Australian dollar has immediately benefited from the market confidence, as Australians is particularly interested in the soonest settlement of the trade conflict. Indeed, China's industry is the top consumer of Australia's commodities. The Australian versus the US dollar pair is consolidating at 0.7150, the level close to a 10-day highs. To sum up, today the only reason to boost market sentiment is positive news from the US-China trade talks. That's all for now. Thanks for watching and see you back soon.